Wonderful. Good evening, everybody. Ladies and gentlemen, a great welcome to our Wednesday evening webinar by admiralmarkets.com. It's a great pleasure for me that you'll be a part of this webinar series. And I hope you had a great day and great week up to now. Thanks, Rolf. Für dich übrigens auch. I hope you had a great week up to now, and it was a wonderful sunny day, at least here in Germany, especially here in Bavaria. And we are so grateful about this great summer and this great autumn up to now. It makes good vibes, and it's necessary for our trading success. Okay, let's start for our evening webinar. The correct stop, part 1, another part of our education series, and I'm very grateful that you attend this webinar around the world. Jack, Desis Lovers, I can see Emeka, Joe, Kirk, Margus, Rolf, Santiago, Safswan, Stefan. Thanks for being here this evening. Let's start, and especially a great thank you for Admiral Markets and my partner here in this webinar, which were started this webinar. Thank you very much. So we want to talk about the stop and how we can use it. And it's a part of our this trading education plan. We are from beginners to professional. And yes, first, as every week, we have to talk about the risk. Disclaimer, you know, Forex and CFDs are complex instruments. You can read it by yourself. Additionally, please be advised to study our key information documents called KIT in order to understand the nature, risk, cost, potential gains, and loss of products offered by us. So, and as well, you know, ESMA has a great impact and make the difference or made the difference between retail clients and professional clients. We are using only trading demo trading account in this webinar, so the high leverages doesn't matter about this webinar. Yes, why do you have to use and to choose Admiral Markets? Of course, BEX, best index offerings about DAX and Euro, US dollar. And for me as a real trader, especially very, very important, no minimum stop distances or requotes. That's really important if you want to go inside of the market very close to the current price. That's one of the best reasons to choose Admiral Markets. So you can see this is the impact about the ESMA, important changes for Forex and CFDs. This was the former I missed the word. You have to pay for it, leverage restrictions, and this is the margin. Now, that's the right word. This is margin before ESMA, and this is the margin after ESMA. So now you have to make the decision if you want to be a retail or a professional client. So now your options, you can choose retail or professional. And if you want to have contact to us to Admiral Markets by mail, phone, Facebook, or admiralmarkets.com. I see I have the wrong topic. The wrong topic. Everything I choose, the correct stop. So part 1. So, but the topics are correct now. So why do I need a stop? Basically, that's one of the topics we want to talk about. Where should I place the stop? And who do I guide the stop when the trade is working? And what kind of impact has the discipline to the stop? That's a big, big topic we need to talk about. Because basically, so especially the stop is not the large topic. It's not a big deal to talk about the stop. So most of you and most of the traders know where we have to place the stop. But discipline, how do I guide? Or why do I need a stop, basically? That's the big topic. And maybe you will be surprised because I didn't prepared a lot of slides this evening because we work at the chart this evening by Admiral Markets in our MetaTrader 4. But let me tell you something before we switch to the chart. Why do we need a stop, basically? I'm in the trading business now for around 18, 19 years. And I know there are a lot of opinions outside in this business, and people say they don't need a stop. They don't use a stop. And in my past, and it was a really bad experience, I thought the same. I don't need a stop because I'm in front of the PC. I can push the button. If my price level is reached, then I can push the button. But maybe you made the same experience. Did you ever switch your stop? Come on, be honest to me. Did you ever take your stop back? Did you ever switch your stop to another point more far away where you set up the stop before? And I know all of us made this experience in once a time in the past. And this is not a technical issue. That's a mental issue. So, and we have to make the difference between why do I have to use a stop and what does it mean when I use a stop. So what task or what task has the stop to do? And there's a big difference. Maybe you make, and in this part one, we want to talk about if we can use or if we want to use the stop if you make trend trading. And next week in the second part, we want to talk about how we can use the trend, the stop when we make movement trading or breakout trading. That's completely different. In this topic, in this webinar, we want to talk about how we can use the stop when we make trend trading. And our stop, and let me show, maybe this is a working trade. It's based on my Dow Fibo Pro. We talk about tomorrow at 11 o'clock. We're going to make our market overview. And you can see this is a trend. And you can see on the lower side, here is placed my stop. Here I'm going inside of the market, and here where the stop. What does the stop mean? And it's different because most of the people think the stop is a part of my money management. That's wrong. The stop only has the task to protect your trading idea. Let's repeat this sentence. The stop has only the task to protect your trading idea. Just think about this sentence a few seconds. The stop has always or only the task to protect your trading idea. So what kind of trading idea do we have here? We want to make trend trading. So when is the trend broken? The trend is broken when the price falls below our point 3. When the price falls below this point 3 by close, that's very important, not by a spike, only by close, then the trend is broken. So we are trend trader. We are making our trends outcoming of the correction in direction of the trend. Like this one you can see in the chart right now. But when or if the price falls below this point 3, the trend is broken and your trading idea is broken as well. So the stop means it has to protect your trading idea. It's not a part of the money management. The money management, and about this topic we want to talk in another webinar ahead in this trading series. Your money management protects your money, not the stop. You have to make the difference here. The money management, maybe you risk 1%, 0.5, half a percent, maybe. Then you know how much money means when you risk 1%. Because 1% of an account of 1 million is different to $1,000. But you know it. If you risk 1%, yes, 1%, you know percent. If you risk 1%, it's German English. I hope you understand me. If you risk 1%, you know you risk maybe $100, maybe $50, maybe $500. That is your money management. But if you risk this amount of money, it's like your comfortable factor. Oh, I called to my clients always the penguin factor. Do you know the penguin factor? I will explain what is the penguin factor. Maybe you didn't hear it ever before. The penguin factor. How can I explain it? I guess you was in a zoo already. New York, Frankfurt, wherever, great zoo, a lot of animals. And maybe you ever saw in your life a penguin. A penguin outside of the water, standing on a stone with 2 or 3 or 4 other penguins. And we know if we watch them or we watch them, they are really looking so cute and so funny. No neck, no legs, only head, body, feet, and black and white. They're looking so cute and so funny, but they are always in danger if they are outside of the water. They have a lot of enemies, like sea lions or crocodiles or whatever, if they are outside of the water. And we are laughing about them because they are looking so cute and so funny. But if is a penguin in the water, no one, almost no enemy can catch them in the water. No one can beat them in the water. Almost no enemies inside of the water. Almost, of course. That's the penguin factor. And that's the reason why we're talking about a comfortable zone. I called it the penguin factor. Where do I feel comfortable about my money management? And this is not depending of my stop, because you can see the stop has to be placed here below this green zone. There is the end of the trend. There's the end of the green zone. And if we have a close below the green zone, the trend is over, the trend is broken, and my trading idea is done. But as you can see, my stop lies or is placed more lower than the green zone. Why? Because I know the market is so bad. The market is always bad. Because you know it. And I guess you ever made the experience, the price is go down and go down and go down. Pick up your stop, move, and jumped up in the right correction. Tell me, type it in the chat box. Type it in the chat box. Did you ever make this experience that the market picked up your stop, moved, and then went in the right correction? Did you ever make this experience? Type it in the chat box, please. Come on, talk a little bit to me. It's not exhausting. Of course, we know them. We know that experience. We know that. Yes, too many times, Jack. Welcome. Give me a 5 handshake, because I made the same experience. So, and that's the reason why I placed my stop more lower than it has especially placed below the green zone. But why can I do that? It's a part of my high five. Yes, thank you. That's the reason. It's a part of my money management. It's a part of my penguin factor. Where do I feel comfortable with it? Because I know if the price is running into my stop, I will lose maybe 50 euros, maybe 100 euros, maybe 30 euros, whatever. But it doesn't matter to me. I don't care about it, because it's a part and it's in my comfortable zone. It's in my penguin factor zone. And if you are in your penguin factor zone, you are not in danger to have an impact in the trade. You can wait about what the market will do. That's the reason why you will have to make the difference between the stop, what kind of task have the stop to do, and my money management. And that's the reason why you have to put your the real stop more lower than it has to be, especially or in real. Because like this trade here, the real stop has to be placed here below this green zone. But you can see I put it a little bit more far away, because this is my money management. I have a lot of space. Now the price will come back. Maybe it will make a spike below this green zone. I don't care. It doesn't matter me, because my stop is placed more below. And that's the reason why do we have to make a difference between the task of the stop and the task of our money management. Maybe you can realize it. or you can remember it. Maybe you write it down. I don't have a slide for that. It's only experience, ladies and gentlemen. It's only my experience. I'm in trading business since around 19 years now. I have so many trades. I have so much losses in my business, fucking trading life. And this is, you can write books and papers and whatever, but you don't can write down feelings. It's so hard. And all of us, we make this experience if the price goes down and up in our stop, move there, and then it goes in our direction. So the stop has the task to protect your trading idea. But the real stop has the task to protect your capital, your money management, your account. So you have to think about your own penguin factor. Where do you feel comfortable? Where do you feel comfortable? If you will lose $10, 20, 30, 50, 100. Another said, well, 500 is my comfortable zone. Another guy says, $1,000 is my comfortable zone. But most of the people forget one thing. They always think you have one loser. That's not the big deal if you have one loser. But what do you do if you have a drawdown phase? What do you do then? Maybe you say, my comfortable zone, my penguin factor zone is when I lose $50 per trade. Okay, it's not a problem. Now the price, you lose money, $50, the trade doesn't work, you lose $50. And you sit in front of a PC and says, I don't care. What else? Okay. But then the next trade, or you can see I have working there 3 trades, Rod, 3 trades. What do I have? What do I feel when all of those 3 trades are going to be losers? Then it's not 50 euros. Then I will lose $150. And is $150 your penguin factor zone as well? Less people, very less traders think about that topic. They always think, I can lose one trade. I can make one loser. But how will I know when the next drawdown phase will come? How will I know it? I cannot know it. And that's the reason why do you have to think about your money management, not about the stop, the money management. And if you are ready to lose $50, it's too much, because it's not a big deal in one trade. But if you make 1 loser, 2 losers, 3 losers, and in a row of 6 losers, it's a normal behavior in a drawdown phase. And now imagine you make 6 losers in a row. Then you will lose $300 in the row. Is that also your penguin factor? Is that also your comfortable zone? I guess it's not. And then you are a human. We are real people. You have feelings. You have a lot of emotions by trading. And imagine you have 6 losers in a row. Are you really capable to make the 7th trade in holding your rules? Or are you in danger to put your stop more closer at the price? Or are you able to hold on your rules like this one you can see in the chart right now? Think about that. That's a big, big deal. That is a big deal. And that is one of the topics most of the traders don't think about that. So all of us, we all knowing the great sentence, let the winner runs, but cut the losses. But be honest, most of the people make the opposite direction. They cut the winner and they let the losses run. If they take back the stop a little bit more, or just a little bit more, and the price comes so close to my stop. Let's take a look at the hourly chart. Let's take a look at the daily chart. Maybe let a bit. Come on, let's a bit more space for my stop. I'll take it back. I swear to God, you made this experience in the past. Otherwise, you never trade in real. Because we are humans. We hate it to make losses. Because a loss in trading means pain. A loss in trading means it hurts me. And a normal human has a lot of fear about pain and hurt. That's one of our emotions. The fear is our biggest emotion we have. Otherwise, you will cross the street on the street, but you have fear that you will have a car accident. Fear is the first emotion when you come by birth on this earth. It's the first emotion you feel. You come on this earth, you are hungry, you are thirsty, it's fucking cold, and you need your mom. And you have fear. You lost all of that now. It's the first emotion you feel if you come on this planet. And our brain and our brain will do everything to avoid that you have pain or hurt. And that's the reason why you take your stop back. Maybe you can realize what I try to explain you if you talk about the stop. It's easy to guide the stop. So let's talk about this. Look at this one. Maybe we have this one. Now the price will come a little bit back, then rise up, then back, then rise up, then back, and rise up. So how do we have to guide the stop? No, it's not a big deal. Look at this one. The stop is wandering from that point 3 to that point 3 to that point 3. It's not a big deal. I can show you in one of the trades I have on my especially. Let me show you it. I only switch one time to my to this one, Swiss franc Japanese yen. You can see I started this trade. Here. at this point. You can see here. Here was my initial stop. And the initial stop means this is my money management, my penguin factor. And here I placed my called soft stop, mental stop. I have a more space to my initial stop. And now you can see the trend is working and my stop is wandering from point 3 to point 3 to point 3 to point 3 to point 3. Maybe we will have a trend continuation here now. I have a question to you. Were you able to make the same trade? I started it on 26th of September. It's working now for almost today, 2 weeks. I started this trade 2 weeks ago. Were you able to hold on these emotions? Were you able to make this trade? That's the question. And this, ladies and gentlemen, that is the task of a real stop. And this is the difference between money management and the task of a stop. So, we are trend trader. So, where do we have to place our initial stop? On every paper you can read, if you make trend trading, you have to set your stop below the last 0.3 or the last low in other papers where you can read it, low or whatever. I say below the 0.3. But I know about my experience, and I can give you a lot of experience back. You can be a part of my experience. You don't have to pay anything for that. I will tell you that. In the beginning of my trading career, I put my stop as well here, my initial stop. And you know the task or the function of the initial stop. And now in this case, the broker Admiral Markets knows your stop, because the initial stop is well known by the broker. So he can look in the book map, in the order book, there is placed the stop. And everybody can see it. And we know it at the best. The price very often makes some tests of these zones, of the support or resist zones by some spikes. And I hated it so much. So they picked up your stop because you placed it exactly under the 0.3 and you are out. Maybe you are in the job and you didn't realize it and you were stopped out and you cannot replace the trade because you are on the road, you are in the family, you are with your wife at some other topics you have to do, and you cannot make a re-entry, but you are out. And that's the reason, and it's only a proposal from me to you about my experience. Put your initial stop more far away from that place where it has to be. Look at this trade. Especially, we started the trade here, in this here. Here was our balance candle. Here we started. And in a normal case, because we are make trend trading, the stop has to be placed here. But we know the experience, we know the behavior of the market. And maybe not especially in that. Let's take another one. It's where I can show you a little bit better. Aussie US dollar. So you can see it here. We have a trend. we have this very large correction zone. Here were our balance candles, and we want to make trend trading. We can see from red to red. Dow Fiber Pro, we talked about 2 webinars ago. From red to red. And you can see in normal case, your stop has to be placed under this 0.3. Because if the price will go down and closes below this 0.3, your trading idea is gone. Because the trend is broken and your trading idea is gone. End of the discussion. But we know the behavior of the market. Very often, does this 0.3 mean there's a great support? And we know the behavior of the market. Very often, such zones were tested of the market again and again and again, but very seldom by a close, especially you have a very young trend. If you have an old trend, maybe the 5th or 6th or 7th arm, trend arm, you know, one movement, one move, one correction is one trend arm. If you have a really major trend, then the danger is very high, or the possibilities are very high that you have a trend break. But very seldom in a very young trend. And this is the first correction zone in a very young trend. But it can really be, it can really often happen, yes, that the price will test this support zone again. So if you have placed your stop exactly there, the possibility or the probability is really high that you will get out of the trade. And it's not sure that you be on the place when you get out of the trade and you can make a re-entry. Maybe you're on the job or whatever. That's the reason why I put my stop more down or more below under this 0.3. I have a little space, sometimes a little bit more, sometimes a little bit less, but always more space below this point. So that I can expect, or that I can hold on, or it's not a problem for me when the price makes some spikes to the lower side. Spikes and go up. Spikes and go up. So you can see like this here on this space. You can see it here. Can you see it here? A lot of spikes, but no close. Only spikes. The price tested this zone. And it's so stupid to set or to place the stop exactly there. It's stupid because we know the behavior of the market. So that's the reason why I'm working in my software I use for my trading, Agena Trader, soft stop. Because my initial stop is known by my broker, because it placed in the order book. But my software has a stop, a soft stop below this 0.3. In Admiral Markets, in MetaTrader, you can use alerts or an alarm, however you will say, because then you can react. If you have a close, your trading idea is gone, you can close the trade. But if you see only spikes, it's only an alert, it's only an alarm, but not the stop. The stop is placed more lower than the exactly stop has to be placed here on the green zone. It's only a proposal from me to you. It's not a rule, but all of us, we are knowing the behavior of the market. That's my experience about the initial stop. How do we guide the trade now? Okay, it's not a big deal. It's really easy. If we have a trend continuation like this one, the price goes up with a close below above this point 2 here, goes down and goes up, then our stop is wandering from this point 2 to this point from this point 3 to this point 3, and then to this point 3, and as long as the trend is running, always to the point 3. This is the topic, or this is the behavior, how we make our how we guide our stop if we make trend trading. But as you could see in my trade of Swiss for Japanese yen, it's running for 2 weeks now, and I would lie, I really would lie, if I would say I never thought about to close the trade. It's really, I struggled about that market. I saw often I saw the supports and resists. But should I tell you something? I'm an experienced trader, and I have my penguin factor zone. It doesn't matter how will end the trade, because I make a part. I sold something. I sold half the position. I sold part of the decision. Part of that position. The stop is in the plus above my entry, so I'm safe. I'm safe. What should be happen? The worst case, the price will come back and put me out in the plus. So what on? It's only one trade. It's only one trade. It doesn't matter me tomorrow. I don't care about the trade tomorrow and the day after tomorrow. It doesn't matter me. It's only one trade. It's not really important. From the beginning, I wanted to have a winner. And now I have a winner. Because always, if you have an impact on the trade, I swear, and I can promise you, you always make the wrong decision. You always make it. If you close the trade before you will reach your target, I swear, maybe the price make a correction, and then the price is running, or the trend is running in your target. If you let your trade running or working, I swear, you make the decision, you make the experience, the price will come back and stop you out. You will make especially this experience and this experience. But if you hold on your rules, and if you realize where are you in the market, and in this case you can use this market profile. We will publish it this week or as late as next week. You can buy it, or yes, you can buy this profile here on the right side. It shows you where are you in the market. And if you come from an extremely zone back to the fair value zone, you can let run your trade. Let's make the market give you the decision how much money you will earn. It's not it's not up to you to make the decision how much money you will have or you will get from the market. It's only a decision of the market, and you always will fail, I swear, if you make this one or this one. In that moment, if you are safe, or if you reach your first target, maybe red to red, it's your first target. Take your initial stop to the plus. Take it above your entry and you are safe. Let the market make the decision how much money you will earn. It's not up to you. It's not your decision. And I swear, and I can promise you, more often than not, you will make the decision, you will make more money as you expected. Let me show another trade is working. It's a real example. It's a really good example. This one, look this in US dollar, Canadian dollar. You can see I started the trade here, below here. Here is the, where is it? Where's my, here. I started it here. You can see it. Here was my first target. I sold the half of the position. And you can see my target is placed on the point of high here. Here is my target, my final target. And now you can see the price goes up and goes down, and I was in the winner zone here almost 2%. And I would lie if I would say I didn't thought about if I have to close the price, if I have to close the trade. But I was fighting so hard with myself, and I promised to myself, never I have an impact of my trade. I want to get the decision to the market. And as you can see here at this point of this, the pink color, the pink line here is my soft stop, my mental stop. And the price goes below this mental stop, but only with a little bit close, but it was not enough. And we have a trend break. But you can see a trend break doesn't mean a new trend. Of course, you can see a trend, but it's a corrective trend. And you can see, I swear, it was so many anger if you get out of the trade here. As you can see, the price goes up. So that's a part of my trading. And that is the thing I teach to all my clients. Let the market make the decision how much money you will earn. Oh, look at this one. Look at this one. It's the seventh arm of this fucking trend. And there were a lot of opportunities to get out of the trade. But you will fight it with yourself, I swear, if you will get out and the price and the trade or the trend is working on and on and on. That's the reason why you have to avoid to have an own impact of your trade. I swear. That's the correct behavior of a stop. Put your initial stop let him more space at the price, or the stop has to be placed below the 0.3. Let a little bit more space here. And if you have a trend continuation and you will reach your first target in our Dow Fibo Pro setup, you can see we corrected to the this one. We corrected to the red zone. Here is reached. Here is our first target. And if you reach your first target, put a little bit out of your position, maybe sell the half of your position, put your stop above your entry, and you are safe. And let the market make the decision how much money you will earn. You will never reach the highest point or the lowest point. It's only an accident if you will print up exactly the high or the low. It's only an accident. Don't duplicate it. You cannot duplicate that. It's only an accident. How will you know how far is the trade running? How will you know how far will the trend is running? How will you know that? Who you are that you can make that decision? Are you the market? No. Am I the market? No. We both are the market? No. There are millions of traders around the world. 98%. 98% of traders, of retail traders, failed in trading during 5 years. That's a statistic. I will show you in one of the next webinars. 98% failed in trading during 5 years. That's a lot, I guess. So only 2%, only 2, not 5, not 10, only 2% are successful in trading during 5 years. What do they make something else that the other 98%? They let make the market the decision how much money they will earn. They hold on their rules. They have a lot of discipline, experience, calm in trading, not action, only calm. That's the part of successful trading. And that's part of what I teach to my clients every day by day and day and day. The first topic about where do we have to place the correct stop? It's so easy by trend trading. Below the 0.3 with a little bit space that we can hold on spikes and don't get out of the market by spikes, only by close. And if you have a trend continuation, then you can put your trade to the upper side from here to here to here. Especially you can see if you have the trend here from this 0.3 to this 0.3 to this 0.3 to this 0.3 and this 0.3 and this 0.3, and here you get out. Let the market make the decision how much money you can earn. It's almost 7 o'clock. Sorry, I overload the time. My fault, sorry. We only have 45 minutes, but it's an important topic, and I can tell you about of my experience a lot of this topic. So I hope you have a little bit understanding about that. And this was the first topic, the first part of the webinar about how do we use the correct stop. Next week, next Wednesday, we want to talk about when we make by movement and by outside and inside bars, for especially and by breakout. And so I hope you have a little bit fun with me about this topic. I wish you a nice evening and a great night, and I hope we will see us next week, or maybe tomorrow at 11 o'clock. By then we have a look at the price here and of the Market Watch trading ideas by Admiral Markets tomorrow at 11. Have a nice time. Thanks for being a part of this webinar series, and take care and enjoy the rest of your day. Bye-bye.